Could one day your retirement portfolio be made up of sports investments? This is going to be a very interesting topic to discuss. I'm glad you all can be able to join me today on talking about event contracts and how they're transforming the sports industry. You can go on any college campus today and see so many individuals betting on sports every single day. An estimated $30 billion is going to be wagered in U.S. sports books on the NFL season, an 8.5% increase from 2024 at $27.6 billion. This is already something that's being talked about a lot in the beginning of the season, as you sort of see a lot more commercials within the sports wagering industry has built up. You see traditional sports books, daily fantasy sports books ramp up production incredibly to try and get a lot of people to bet on their favorite teams, bet on sports outcomes, and be able to bet on various different sports entities. But something that's been very interesting that still has gone very much under the radar for the beginning of the sports season is an interesting platform called Kalshi. And this is something that I would love to discuss about today, and how potentially what they're innovating within not just the sports industry, but the overall events contract industry could be something that could eventually reach our retirement portfolios or our 401ks here. I'm going to start off this with this article, How Event Contracts at Kalshi Differ from Sports Betting. This was written by Christopher Glacier. Hopefully I said his name correctly, but I want to start off here and sort of explain what what even is Kalshi, what is the platform, and then sort of explain how from that platform we're going to start diving in and mapping out the technology behind the platform, the roadmap of the industry, how we just went from sports betting to daily fantasy sports, and now how we're trading financial derivatives within sports. The Great Recession in 2008 was focused on real estate debt derivatives, and now we're in 2025 and we're about to be creating sports financial derivatives. This is going to be a very interesting subject to discuss. As you can see here, it says during March, sports bettors may be focused on March Madness. They missed another platform set to launch at the same time, Kalshi. Kalshi is a platform that will let its customers put money on yes or no questions. If customers are right, they get $1. If they are wrong, they get nothing. Trades are priced between $0 and $1, and customers can trade their holdings like any other financial security. So we got these sports books here. We got FanDuel, Fanatic, Bet365, BetMGM, DraftKings. There's a whole plenty more set of sports books here. And then also within this industry of, we'll call it sports gambling, we have daily fantasy sports. And the ones that have come out of here, we have Prize Picks, which a lot of y'all have seen with those Drewski commercials. And then we also have Underdog. These are the two main ones. And there's a couple others, like I believe there's Better, which it was either one of the Paul brothers was invested in. But we can see here, so we have our overall sports books here, and then we have our daily fantasy sports. This industry specifically has been very popular amongst Gen Z and millennial bettors. So looking at this here, Prize Picks and Underdog, what makes this interesting is that since they're daily fantasy sports, they're regulated a little differently than the sports books right here. So Prize Picks, they really focus on player props. So I'm going to put this in red so people can understand. So with player props, this is a little different than how I'm going to explain the generic sports books. And just to say, some of these companies here, like DraftKings, also has their own daily fantasy sports group, which is like Pick'em. But DraftKings itself is a regular sports book where you're doing a lot of odds making here. Okay, so starting off with daily fantasy sports, they focus a lot over player props here. And player props are individuals being able to place bets over or under on specific outcomes, like stat outcomes. So for example, since we're in the NFL season, I'm a Ravens fan, so I'm going to use Lamar Jackson as an example. So Prize Picks, Underdog, Better, one of these companies can go up here and say, we have a player prop of getting Lamar Jackson, whether he's going to get over or under 3 touchdowns. We don't need a plus here, we just need a 3. So this could be a player prop right here. Over under, will Lamar Jackson get 3 touchdowns? And many of these platforms, the way it works is you need to have at least two specific props in order to make a wager. So if we look at this here, this could be one wager. I could do the same thing in the game. We can have over under, and they're going to be playing the Chiefs this Sunday. So we can do the same thing for Patrick Mahomes. So we have Patrick Mahomes. Also, let's say two touchdowns here. So we're seeing here Lamar Jackson at over or under 3 touchdowns, Patrick Mahomes over under 3 touchdowns. This, depending on the odds. So the way a lot of these payout works is that these sports books and daily fantasy sports, they have odds. They do a bunch of mathematical calculations and using a bunch of analysts, machine learning models also to try and predict what is the probability of this really happening. And then they set a specific odds. And I'll get specific more into out. And then they talk about the specific odds. I'll get into more about why they don't really set what. I'll get into more why they don't base odds on what are the true odds of something, and I'll highlight this why when it comes to how they make money off these people and why this is important for while we're going to talk about Kalshi here. So we're seeing this prop here. We're saying Lamar Jackson, Patrick Mahomes. This could have, for daily fantasy sports, they don't do odds in terms of, they do odds. And so for player props, we have these two here. They do odds in terms of multipliers. So this could be a X multiplier. So for placing money on this prop here, if I have $10 and I'm putting $10, this prop, this wager here, I can 3x my money and get $30 back because of this multiplier right here. I'm putting $10 in, I'm getting potentially $30 out. So in this situation, in this transaction, this is the deal right here. If I lose this, which means if any of these fail, I will forfeit my $10 to the sports book, and this whole position is gone. Why daily fantasy sports is different from the sports books here. The reason why daily fantasy sports are different than sports books is because with sports books, they don't just offer player props here. They can offer aspects like a very traditional one is called the money line. So what's a very popular one when it comes to traditional sports books and sports gambling are called money lines. Money lines here are specifically when you're trying to wager on who will win the game. It's one of the most traditional bets that has been made in history. This is essentially saying, I'm going to put in $10 and wager which team will win. The key thing when it comes to sports books and when it comes to daily fantasy sports is that they don't do their odds sports books based off of multipliers here. This is very simple to understand. I'm putting $10 in with a chance of earning $30 because of the odds here. They put this at 3x multiplier odds. For money lines, they do things for money lines specifically, you see they do things within a positive or negative line. So here, the negative 150 and the plus 130 is very similar to people who've studied finance, how bonds typically work. When you have a money line here, a money line showcases how much I have to invest and what my potential return is going to be. If you have negative odds here, so Baltimore's, and these are the real odds for the game as of the time of recording this, Baltimore's odds is negative 130. So if I put $10 in, what does this negative 150 mean? Negative 150 is saying if I were to put in $100 on, if I put $100 on Baltimore, no, what these odds are saying is if I want to earn $100, so this is almost in reverse. If I want to earn $100 from Baltimore, placing my wager on Baltimore specifically, if I want to earn $100 from betting on Baltimore, I have to I have to gamble, $150 here. But if I bet 100 on Kansas City, if I put 100 on Kansas City, I have the potential to earn $130. So when you see the negative odds, that necessarily means the favorite. Typically, based off of what the sports books have calculated, they believe Baltimore has the advantage over the Chiefs. So you have to put in more in order to get $100. But if you put $100 here, you get 130 with the Chiefs. It's very similar concepts to dealing with risk in terms of finance, right? If you have a riskier asset, you can put less in and get higher return versus safer and theoretical asset here, you have to put more in to get a similar return. So showing the innovation within the industry, this used to be the most popular way, and I'm using the money line as an example. There's so many more other specific bets that all of these sports books makers make. It's very simple to understand. There's plenty of other types of bet offerings that all these sports books offer here. But showcasing the money line helps us fundamentally understand how traditional sports betting really works. Sports books and daily fantasy sports are different in terms of not just what they offer, but include the regulation that's around it. As you know, within the United States, when it comes to regulating gambling, it's normally done by the sports commissions within each of the states. So some states will allow sports betting in terms of this sort of sports betting, money lines and other sort of financial bets right here. This is regulated differently than how daily fantasy sports is regulated. When daily fantasy sports was regulated, the idea here is with a sports book, you're going against the bookmaker themselves. When it comes to daily fantasy sports, it's a little more lax in terms of the regulation here. The thought is that it doesn't take as much. So I use the money line as a very simple example because a lot of people can understand, like, you're betting on whether someone's going to win or if one team's going to win or if the other team is going to win. So in viewing it in this standpoint, you may ask, why are these two different? Why are sports books and daily fantasy regulated differently? Well, when it comes to sports books, they're regulated by the idea of this is a game of chance. So you don't really know which team is going to win. Obviously, you can predict that this specific team could win based off of these circumstances. They have home field advantage, or a team doesn't have their star player, or their recent performance against certain teams. So there are so many types of variables that you could place in here. But the general thought when it comes to sports books is that you're betting off of chance. So this has to be regulated differently because this is just based off of odds and chance. Daily fantasy sports, however, is viewed in a different landscape here. Daily fantasy sports, they're able to lobby a lot of governments that this is not based off of chance. And what's something that's interesting here, showcasing this, is they show and in doing some of the research behind this, in the US, the Federal Unlawful Internet Gambling Enforcement Act of 2006 exempted fantasy sports from gambling restrictions, arguing that outcomes are determined by participants' sports knowledge and strategic decisions rather than pure luck. This is very interesting because here it showcases, no, there's people who, if they understand that maybe Patrick Mahomes hasn't thrown for 2 touchdowns the past couple games, this may be, or maybe he throws for 2 touchdowns every 5th game. This is you have much better odds of figuring out and calculating this versus the factors of, will a player be able to, or will a specific team win or lose? So it sort of breaks down the individual aspects of this is based off of skill in the eyes of the law. I'm not really saying in terms of actual performance. This is based off of skill. And this here for sports books is based off of chance. This is a key concept that a lot of people don't know when it comes to wagering on sports books or any daily fantasy sports platform. Many people don't understand this specific point here. The odds are not set by the true probability, but based on market wagers. Sports books and daily fantasy sports make money on the market wagers. And this is something that people don't understand when it comes to creating algorithms to try and predict whether a team may win or lose. And we can go to using both of these examples here. Is that you could create a machine learning model which many have done before. So this is a very basic sports prediction model that a lot of people who maybe have a background to data science, machine learning, anything when it comes to sports analytics, this is what a lot of people may sort of base a lot of their models on. Obviously, they're a lot more sophisticated, but the idea is that you're going to have specific features. Let me say I want to collect weather data for a specific team. I want to see the team that they're playing and then the time of day. So let's say we're trying to predict for both Lamar Jackson and Patrick Mahomes. Lamar Jackson and Patrick Mahomes, let's say the game is in Kansas City, it's warm. Okay, so warm, we can say these are the teams that are playing and this is the time of day. We have our model. This could be any type of prediction model. A logarithmic prediction model is typically what a lot of people use. We could use some different types of models like ensemble models. And the idea is that this is the sort of algorithm here based off of these features, based off of this information going here. The model is going to spit out a specific percentage. And this is sort of the idea of what people like to place wagers on. A lot of people view this as, okay, this is the probability that this is going to happen. And based on this probability, I'm going to compare it and say, this has, let's say we're going to say for Lamar Jackson and Patrick Mahomes to both hit the over. So for Lamar Jackson to throw for over 3 touchdowns and Patrick Mahomes to throw for over 3 touchdowns, there's a 40% chance of this happening. And because of this, they are going to compare this percentage here with the potential odds of what 3x odds are here. So one may say this is I calculated a 40% chance. This is a 33% chance. They're underpricing this by saying there's less of a chance of this happening. I believe there's a greater chance. I'm going to put my $10 in, get my $30 out, and then I'm going to make $20 profit. Most people doing this have noticed that anybody that follows this model long term knows that this still does not work against the sports books here, right? Because again, at the end of the day, even by predicting with all these variables here, no model has ever said they're 100% accurate. There's going to be some variance. There's going to be some covariance. There's so many different factors that come to creating a model that to find a true probability, especially for a lot of retail bettors, to find a true probability is a very, very low chance that people are going to be able to find a true probability of this outcome happening. And sportsbooks also, even with all their infinite resources, understand that they could also predict a true probability, but they may be off by a specific percentage point. So for them, they're not on the business of trying to predict whether 33% is the proper or whether 33% is the best probability of this happening. Okay, so from the bookmaker standpoint, your specific bet has to be placed into a 4 square like this. This is why we used 2 props instead of, you can go upwards of 6 props. But this is why this is important to understand this aspect here. There's multiple choices you can make in this 4 square when you are betting your $10. And when you're betting your $10, each of these specific choices and outcomes have a different probability associated to it. So you can obviously choose this, which is I'm going to choose both of them over. The probability of both over is going to be a certain percentage there. You can choose both under. That's going to be a certain percentage. You can have an over and you can have an under here. You can have an under and an over here. So you can see there's there's about 4 different probabilities or 4 different types of 1, 2, 3, 4. So you can see so for sports books, when they view this bet here or daily fantasy sports, so for daily fantasy sports, when they view this specific props here, you're going to have 4 different outcomes. Players can bet 2 overs, they can bet 2 unders, they can bet an over and an under on both of these sides here. Calculating the true probabilities of each of these is something that they do. That is correct. And that will be changed based off of the multiplier here. So maybe if they say 2 unders, and this is very likely, the odds of the 2 unders, if this is higher, they're not going to pay 3x odds. They may pay 1.5 or 2x odds. And subsequently, if you're going to say both over and 1 under, maybe these are the highest odd, or this is maybe if you say 1 over, 1 under, and this is the highest payouts because it's the least likely based off of their calculation of this happening. What makes it interesting for them is they don't need to make money off of predicting what you're going to do. They just need to make sure they can balance the sports book, that they can always net on the spread. And this is important to understand. So to make this as simple as possible, we're putting in $1,000 into this market. So let's say we are in the position of prize picks. We see $1,000 have gone towards this specific market here. And we're, let's say, for simplicity's sake here, we're gonna have our overs and our unders. So these are the two choices. You can either choose both over or you can choose both under. Let's say at an equal market, $500 is placed here and $500 is placed there. That means $1,500 could potentially be paid out to users here, and $750 could be paid out to users here. All right. And this is from a $1,000 spread here. For them, they have their own bankrolls and they have to make sure that they're not losing money on every single position people are taking. So for them, they have to balance the book. And this is something that's known here. So you can see this is $1,000 on the total market. Let's say, so let's showcase this here. Let's say the market is putting $750 towards these two props and then $250 towards these two props, the under and the over. Let's say the odds here are 1.5 odds. $250 wagered here has a potential payout of $375. And then this is a 3x payout here. So this could be $2,250. Or this could be $2,250. Showcasing this between here, the sports books have their own bankrolls, and they also have to calculate what their profits can be, which is also known as VIG. So if too many people bet on one side, they can lose money overall on this specific market here if too many people bet onto one side. And you can see it's because these odds are multiplied higher than these odds here. So for what sports books have to do is they often sometimes have to balance the books, right? So since so many people are favoring this side, they may want more people to try and bet on this end here. So instead of it being maybe 1.5x odds, let's say the original were 1.5x, all of a sudden this may move to 2x odds. And then on the other side, this may go from 3x odds to... So you can see they could change the odds by balancing the books here, and they could incentivize more people to look at the under right here, because this all of a sudden is no longer 1.5x payout. This is a 2x payout. So, okay, so instead of $2,250, this is only returning $1,600 or about $1,700 here. So you can see how sportsbooks, they can manipulate the odds based off of what the market demands, and not necessarily. Now, it is also true they also can change it based off of the in-game outcomes. But before the game actually happens, they can maneuver the odds to ensure that they'll always make a profit here. And there's a pretty cool calculation in which showcases how they can make a profit. You can research this more into it. It's called the VIG, so you can really research the actual calculations and math behind this. But it goes to show that for sports books, they don't really care if you have all the numbers in the world to predict whether this is actually 40%, because what they can do is change either the odds and payout, or for daily fantasy sports, they may change the over under. Instead of this being 3, they could change this to 2 touchdowns. They could change this to 2.5. It makes people second guess and make stuff based on more of an emotional decision. So this is why it's so difficult for so many people to make money through sports betting or daily fantasy sports, and why overall the industry is very heavily regulated, because a lot of these sports books and a lot of these daily fantasy sports makers, they're not 100% honest in the ways that you can make money. Everyone sees that, oh, I'm looking at, and we'll go back to this example here. A lot of people see this. Oh, if I just put $10, I can make $30. That's $20 profit. If I can do this a couple times, I can make a huge living from this and quit my job. That's not necessarily how it works. They themselves understand that they can influence where you put the $10 based off the psychology of how easy it is to make this $30, and two, how they can price the odds to favor them to always make a profit in the end. So both groups could lose money and they can make money at the end of the day. Over 90% of people will lose money, and hence why there's heavy regulation here. But Kalshi has done something very interesting utilizing a technology called the event contract here. So Kalshi and Wool Illustrators, other event contract makers like Polymarket and a couple others, their technology is unique. So for event contracts, since they're considered financial derivatives, they're regulated here under the CFTC, which stands for the Commodities Futures Trading Commission. So for them, they're the ones who regulates commodities markets, futures, ensure that they're free from fraud and manipulation here. This means that this is an actual legal investment, very similar to stock options or insurance options or some of the other financial instruments that we've currently seen in the markets. This means that by theoretically, you could trade these contracts through a brokerage account or through potentially maybe one day through a 401k and other areas because they're deriving their value again from the sports in which we've seen here and which we're betting here. It's no different than to daily fantasy sports and other sports books. But the key thing is that you're not wagering your money against Kalshi here. You're in turn wagering your money against the markets. That's the key difference here. Instead of going against an odds here, and the odds are set by the money line here, by the sports books, and they're the ones who are predicting and bouncing the odds on both sides. In turn, Kalshi here is saying, okay, you can wager these derivatives the same way you wager them or you invest in derivatives within the stock market. In this case, the market is going against other people. So we can see for this example again here for Baltimore versus Kansas City, we're going to be going against other individuals. That means other people on the Kalshi platform itself to see whether or not whether or not Baltimore is going to win or Kansas City is going to win. So we can benchmark this. All probabilities have to add up to 100%. So Baltimore here, you could say there's 50-50 odds. So the market here sets the odds in theory compared to the bookmaker setting the odds here. So the whole point of a Kalshi market is driven by sentiment and what people believe is going to happen. The bookmakers may price it a certain way as a certain chance. They may say, let's say 30%. There's a 30% chance that Baltimore is going to win, and they're going to price their odds accordingly. Kalshi could say 60% and 40%. So Kalshi could say there's a 60% chance of Baltimore winning, and the Chiefs, there's only a 40%, and we're going to reflect the returns based off of these probabilities here. That means that you're going against other people and buying these derivatives based off of what other people are thinking, as opposed to how the sports books or daily fantasy sports are pricing these odds. That's a whole nother ball game in terms of interacting and betting on sports, because it's truly going against a market of people versus others. This is an example of what the platform looks like on face value here. So we have Seattle at Arizona. This game's going to happen in 2.5 hours, and you can see how the interface really looks like for Kalshi. So this market was created, this information was back from September 17th. So you can see that based on these odds, Arizona had a 56% chance. That was hovering pretty much the same. And then all of a sudden it became a 50%. It became 50-50. And then now we're seeing Seattle has had a chance. So honestly, if you invested here, they thought Seattle had a 38% chance even before the game even started. You will have made 16% on your money right here versus Arizona. If you invested here, you will have lost 14%. And this is, so you can see there's people wagering here on the side on which side of it's going to be on. You have the spread totals. You can see the props, same way daily fantasy sports. And then they have the rule summary. If Seattle wins the game, the market will resolve to yes, and the outcome is verified by the NFL. So you can see this is where they're getting the data for the specific market, and you can check out all the rules here. And oftentimes they pay out very quickly, and it says that the game is tied, the market results are 50-50, and essentially they'll return the value of the contract at 50-50. So if you bought in at 42, you made money. If it was at 60, you lost money. So this article from AI Invest has showcased Kalshi has dominated the global prediction markets with 62.2% trading volume in 2025, up 3.1% alone. So they have 1.3 billion in people investing on the platform. And that's just not sports, but across many different markets. They were very popular for the election market recently, for the 2024 election and other areas here. But you can see other aspects, like Massachusetts has tried to sue Kalshi as a unlicensed sports book, and citing it's very similar to parlay products and their marketing strategies. In terms of the commercial landscape, you can see they're facing the same regulatory hurdles and competition from people like Coinbase and Robinhood and other areas. So this market is about to start to explode over the next couple of years. Because as I said, if they're considered financial derivatives, theoretically, Robinhood, Vanguard, Fidelity, some of these other brokerage accounts and some of these other brokerage companies can offer these same contracts for people to be able to trade with their own investment funds. This is a totally fascinating approach, because now we've just opened up this market for these sports books thought that they're just compete against themselves, and now they have to deal with daily fantasy. All of a sudden, Kalshi, just by legal definition, has commercialized this entire industry to open this up to banks, brokerage funds, potentially institutional funds, all sorts of opportunities there. Now, something that they're facing as a challenge here is, you can see this 43-page Massachusetts lawsuit seeks to stop the company from allowing state residents on the platform, similar to how Coinbase had to do with the stake offerings, because there's no difference between Kalshi's prediction market in their eyes and a sports book, the likes of which are licensed, taxed, and regulated at a state level. So this is important here, because long term, the contracts in which they offer are considered financial derivatives, and for now, people view these as financial derivatives, which is opening this up to a whole bunch of opportunities. I wouldn't be surprised to see a bunch of sports books. These guys have a lot of power. They're oftentimes owned by larger companies like BetMGM. They own a bunch of casinos and other areas there. This could be detrimental to their bottom line, because now for them, if they have to compete against Kalshi and event contracts and financial derivatives, they no longer have the edge of making money traditionally based off of balancing the books here. And for them, this market here, this was guaranteed profit, because all they had to do is balance it to which that they would make money on either side, and they could adjust the odds and the percentages. And obviously they have competitors, so they couldn't rig the odds too much in one way or another, but for them, they could balance the books easily here. In this case, it's up to the markets to decide what the true odds are, and in turn what the true returns are going to be, similar to the stock market. So Kalshi in this case makes money from fees and bid-ask spread. So if we go back to the Seattle Arizona game, you'll see the odds here are about, they add up to 100 or 56% or 54%, 46%. But as you can see here, the purchases here, it's 55% and 46%. You can tell that by adding these together, that's 101 cents. So that's not really a true probabilistic market here. Kalshi often, I say often, all the time, adds fees to purchasing or selling on either side. So you can see that since there's a lot more demand here, they're adding a 55 cents versus 46 cents. I've seen spreads add up to 107 cents. So this is all very dependent on the market in terms of what people are willing to buy and sell on each end. Overall, this market is very interesting, and Kalshi has a lot of opportunities in this space. However, there's just large difficulties, again, in terms of making money. Because as you can see here, when you're investing or when you're wagering within these sports books in these areas, it's very, you don't really exit your positions too often. Now, there's some opportunity to take the wager, sort of just take your winnings if you're winning, or cut your losses in some areas. Daily fantasy sports doesn't offer this as much. You're pretty much locked in the whole time. Here, you can see the percentage throughout the game. So if once this game starts happening, you log on to Kalshi, you can see based off of an event, whether a team scores, whether the team gets a penalty, interception, a player gets injured. the sort of confidence can go up and down rapidly. And this is what's very interesting when it comes to Kalshi sports events versus some of the other events on the other platforms, is that the odds can change so rapidly that oftentimes people can't really make a profit. So let's say Seattle was let's say they're at 70%. And all of a sudden, let's say it was 70%, but they were only winning by 7 points. All of a sudden, Arizona scores. This odds could drop to 50% in just a couple seconds. But for many people to go on and change from 50%, or for some people, they may see 30% to 50%, for you to make money on this sometimes is extremely difficult because millions and millions of dollars are being poured in at the same time, and the market making in terms of finding the correct bidders and the people who are selling, oftentimes there's just a whole bunch of stuff going behind the scenes that make it harder to execute based off of just utilizing the latency of the app here. So for a lot of people, it's still very difficult to make money, and oftentimes the fees do eat into the profit margin. So depending on the number of contracts you buy, you'll have a certain percentage of fees. So overall, lots of people have tried to see how can you make money within this market, and you can sort of think about this similarly to the money lines or traditional sports books. You can say, okay, if this is my percentage, and we look at this example back down here, if I believe there's a 40% chance, again, we're going to say that the Ravens win and the market thinks it's 60% based off of whatever information is currently out there. This may be overvalued, so I may want to buy more into Kansas City and say, I think they have a better chance of winning. That could be an option right there. If Baltimore still wins, you lose the money. We're essentially saying that these prices are based off of the information out there and what people's user sentiment is on these markets here. So you can see here, the more information you have, the better you can react to events. When you're looking at this overall market, the vast majority of people on Kalshi specifically, they are not going to be utilizing extra information. They're not going to be they may be watching the game, but they might not have access to the injury reports. They may not have access to the weather reports, the complex algorithms that other people may be utilizing within the market. There's just so much that goes into this specific portion here. The more information I have, the better you can react to the events. And the second thing is the faster you can react, the faster profit. So when it comes to these markets, it's very different than to how you may envision you investing into stocks and bonds. A lot of stock traders or bond traders or people who trade currencies, they trade rapidly every single day and make money off small price movements. And they have their charts to be able to understand that if the price goes up and down and up and down, how can I sort of trade based off of these movements? Some people also like to use the aspect of how can I trade long term. So if I invest in a stock, this is very traditional to the Warren Buffett method, that based on the intrinsic value is the profits going up over time. And that's how many financial advisors recommend you trading these stocks to be able to invest in stocks and bonds. If you see here, the game outcome is very fast. So they're either going to win or lose, and you're going to know this within 2 to 3 hours of the event happening. This is not like some of the other events, which could last days, weeks, or even months. This is typically very much settled within the same day. So the idea that you can profit long term individually on. We first started off with discussing event contracts transforming sports. Could one day your investment portfolio be made up of sports financial derivatives? I very much see this being a potential opportunity. Whether that be individual derivatives, probably not, but potentially there may be an ETF or a specific fund that may be utilizing algorithms, and maybe they found a proper algorithm to make money within certain markets, and people may have that within their portfolio one day. We don't know, 20 to 30 years from now. However, seeing the evolution of sports gambling is very interesting because it starts off with these sports books and they were making guaranteed profit. And you can see in every industry and every specific innovation within the industry. And you can tell in this use case, it was not just a technology innovation, but it was also legal innovation. And people seem to sleep on commercialization in the aspect of legalizing certain aspects there. Daily fantasy sports really opened up the potential of showing there's a huge market and interest in people wanting to earn money from the sports they watch, just from the passion of it. Kalshi and Polymarket is trying to go through the same route that Kalshi did, especially in the financial derivatives side. I really do believe that they're going to double down on this specifically because when it comes to sport, the market overall for sports betting is about to reach over $200 billion soon. With people and entrants like this, if we're going to have competitors like Robinhood or Coinbase or other people who are able to invest in these financial derivatives, this could ultimately, I could see one day potentially, if they don't create their own offerings, one day these groups could ultimately lose their grip on the industry, and we could see a lot more failures within the sports betting industry. I'm not saying this will happen within the next 5 years, but this gives me a lot of Netflix when they start streaming vibes, or Coinbase when they first brought in cryptocurrencies. It's just a bunch of groups going against institutional players that sort of make it very difficult to be able to enjoy their content or enjoy their offering. Now is being democratized for a lot of people to be able to utilize these platforms here. Hope you guys were able to enjoy this analysis. This was my first time doing something like this. Really going to be pumping out more videos showing how certain industries are commercializing new technologies, new concepts, and how this can really affect our everyday lives. AI has been a big topic for a lot of people, but sort of wanted to start off with something that's a little under the radar, a little more lighthearted. There's going to be much more videos in areas of biomedicine, a lot of innovations in that space, defense, consumer technology, and a bunch of different areas. So if you want to see more breakdowns like this, please subscribe to the YouTube channel. I hope you guys have a great day, and until next time, the Veteran Novum.